All right, so we had that diabolical session on Friday. It's currency-wise, the euro continuing its barrel downhill. Given those cases there in Europe and broader lockdowns going on there, given those containment measures. Wondering also if inflation will continue to escalate. CPI hitting the wires on Wednesday, expected to mark a new high for the sixth consecutive month. Let's get a reader on all of this. Pete McGuire joining us from XM. Pete, a very good Monday morning to you. All right, how are you feeling? What are your thoughts?
I'm fantastic, Andrew. I got the A team this morning, Annette and Andrew. So it's lovely to see you both. What a great day Friday was. I mean, it really set the day up perfectly in the sense where the Nikkei was spanked down nearly 2.7% during Asia trade. I knew that the Eurozone, and we did our breakfast show into Europe, and it was a bloodbath. So that was a perfect day to short. And then that really capitulated with the oil trade down 13% for WTI. So, yeah, everyone was short. US dollar came off. And, yeah, what a great day.
So we've got the ECB, of course, has been fighting to keep the euro down all year. And, of course, you've got to be careful what you wish for. Inflation well above its target, and the euro's tanking. That's not great for inflationary pressures. What a dilemma.
Well, exactly right, Annette. We've got 4.1% for the fifth consecutive month. And if you look at November, it's going to be around about 4.4%. So inflation's certainly out of control. Energy prices sky high. They've come off, as we've seen. And really, that's giving us, I think, a true reading the economic fragility across that Eurozone, high inflation. The growth story is very, very fractured. And if this new, new variant impacts the economic cycle, and certainly through the Christmas trading period in Europe, it's going to be diabolical for their numbers going forward.
Pete, in the face of what's going on right now, the threat, I guess, to economic growth, but we're seeing inflation continue, should we be talking about stagflation in the prospect?
Well, exactly right, Andrew. I mean, it's on everyone's, I think, everyone's tongue for the last 3 to 6 months, that story. And if they roll this through as far as the new variant and what impact it has, if it slows down or if it really craters the US economy as well, then naturally you're going to see issues there. High energy costs leading into winter, which, you've got high gas prices, as we know. We've got, high fuel prices and all of that. So that really is impacting the wallet and the purse spending power, and then you've got weaker growth. So it's every central bank's major dilemma. How do you stimulate if you've got, high inflation? You can't cut rates any lower than zero. Maybe you can. Maybe it's, you give them $100 and they give you 102, or maybe they give you 98 back. So that might be the way forward, huh?
And of course, the other way forward, Pete, is negative interest rates. They've been plaguing central banks for months. It's only going to get worse going forward.
You would think so, Annette. That's the real problem. And so it impacts as far as, anyone with deposits, the age people and everyone. How do you see growth? Where's the, how do you maintain your portfolio if you're not in the share market, you've got it in the bank? It's terribly hard for anyone that's a self-funded retiree or anyone approaching that age group. And then, do you trade on the market? What do you do? Do you look at funds? It certainly is. It's very complicated when you're looking at the big picture globally. And these are very unusual times. And you're seeing that big volatility we saw on Friday. That shows the nervousness that the market really presents to the investor. And this is global, so it's nowhere to hide.
Okay, so Pete, let me put you on the spot then. How are you trading this? Are you seeing any opportunity at this point?
Absolutely, Andrew. I mean, there's great opportunity because what we saw on Friday night was outstanding. All the commodities came under fire. Copper was sold off 4%. We saw crude spanked down. You've seen the US dollar falling from that 97 level or just under to 96, that US dollar index. So there's been great opportunity in the currency market over the last 24 hours, if I roll that back to Friday. And you really got to have both hands on the wheel for the next couple of days, because you could see a continued push down as far as energy prices, though they could bounce. I mean, who knows? It's unusual. You see 13% smash down for WTI. Brent was down 11%. So, yeah, just watch where Asia trades today, Andrew, and that'll give us a pretty good indication, I think, running into New York tonight.
Pete, can I just clarify then, you're seeing this as a correction, not a crash that's upon us?
I don't think I'm not sure whether really it's a correction, Andrew. I mean, it's just come out of left of field, this African variant. We've also seen, I don't think, it's certainly not a crash, but let's just see what goes on as far as investor confidence. That's the sentiment you've got to talk about. You know, you've got to watch the signal, not the noise, and just see the opportunities that present themselves.
And just one from me, Pete, like gold has had everything thrown at it this year, including negative interest rates. It just can't catch a break. Surely gold should be thriving in this environment.
Well, you would have thought so, Annette. You've run the same metric across the Bitcoin, and yeah, so I would have thought that it may have gone higher, but that US dollar index has been the glory trade, up from 93 up to 97, so that's where all the smart money's run. And gold hit 1868, 1870, and then it got spanked down again. So big volatility moves up 100, down 100, back up to just under 1800 at the moment. So the smart money was really on crude. Then I'm sure that they, spanked that down and everyone was short. That's as far as the traders. So those dynamics are very, very, it's a 24-hour a day market. What we see at 9 o'clock Sydney time is a different to 9 o'clock PM, 9 o'clock Sydney time. When you run that into that midnight trade and then you look at 2 o'clock, 3 o'clock in the morning, it's a big 24-hour window, and you've got to be mindful of that if you're going to trade these international markets.
So, Pete, currency-wise, how are you seeing this play out at the moment? When we particularly take a look at the Aussie, it's currently sitting at 71.16 US.
Yeah, exactly, Andrew. It's had a big push down, and that US dollar index has come under some pressure. So there could be a little bit further, profit taking as far as US dollar come off a little bit into the high 95s. I think it's going to be volatile for the next couple of days, and leading up to Christmas, it's going to be uncertainty, and that really is wonderful for a trader because they just want movement, and that's the ingredients that we're after, and I don't think it's going to disappoint this time around either.